My name is Philbert Shih. I'm the founder and managing director of Structure Research. Structure Research is a focused research group dedicated to the wider internet infrastructure ecosystem. Today, this is the APAC Finance Forum that the Tech Capital has put together. So it's meant to discuss topics across the Asia-Pacific region. But today I'm going to spend a decent amount of time drilling into the Jakarta market. So, I think there we go. And I will share some slides if you do have the urge to take a snapshot. You can opt out of that. I will trade you the slide deck for a business card. So come to me after and we can do that. And so you can just sit back, relax, and enjoy not the flight, but the presentation. So we're going to try to provide some context for what's going on in the marketplace here. I think what I've always found Indonesia, not just because of my kind of family connections here, I've always liked coming here, but also this internet infrastructure data center market is extremely unique, has a lot of dynamics that are unique to not just the country, but also the region. When it comes to data center infrastructure, hyperscale has of course been the story of this sector for over a decade, but perhaps maybe about 5 or 6 years here. And unlike some regions in this countries and markets and regions in the sector, you will find that the presence of hyperscale here is quite, it spans both China-based East and West, US-based hyperscale clouds. And so you can see here that there are already 5 live and operating hyperscale clouds, and of course the importance is that they are consuming data center colocation infrastructure. I'll talk about what's coming in the next year, which I think is very interesting because obviously the hyperscale sector is has a very short list of companies. So the other thing that I find very interesting about this market is not just what is driving a lot of the public cloud infrastructure consumption, not just developers, designers, small businesses, startups, enterprise, mid-tier enterprise. What you find here, unlike in other markets in the region, are that there are a lot of homegrown Indonesian, very scaled internet services, internet platforms. We hear a lot of talk in the press about unicorns. I don't use all these services. I don't live in Indonesia, so I hope this is a representative snapshot, but there are a lot of other logos I've probably missed. And again, the importance is that these companies are consuming public cloud infrastructure to run their services, and that those public cloud platforms are sitting in wholesale or hyperscale data centers, not exclusively, we'll get into that topic, but a very large cross-section of them. And hopefully you'll appreciate, I know the text is kind of hard to view from there, but I hope you'll appreciate the update in the outer tier for some of the services with some local ones to the region. So I often update this depending on where in the world I'm presenting this from. But again, so that's been driving a lot of the market's growth. I think if you've been paying attention to what's going on in the sector, if a sector is being driven by a certain type of computing platform, the fate of that platform has a lot to do with the fate and the health of the data center sector. Here, and you'll see this is a 6-quarter view that includes Oracle Cloud in terms of their quarterly year-over-year growth rate comparison. So you'll see the trend over the last, coming out of the pandemic, you'd have seen a bit of a slowdown in terms of the growth. You will note, of course, that those growth rates to the far right of the screen are, of course, still very healthy, but have started to come down. Oracle is a little bit of a different pattern of late, but I'd also show you the 8-quarter or last 2-year view. This is taking out Oracle Cloud, and you'll see that there's generally a pattern there, and what we'll talk about hopefully now and in the session after, you'll note that some of the Chinese clouds have started to slow down growth, decelerate a little further. Of course, the important thing to note is even if you look, there's still significant growth, double-digit, 20-30%. So I talked about in a marketplace that's driven by a very small number of hyperscale platforms. If that's going to be the state of the marketplace, that's going to obviously impact the competitive landscape, impact the demand profile, the pipeline that data center co-location operators have and that they are pursuing. But I think what you're seeing in many markets, and I don't think Indonesia is any exception at all, in Jakarta, you'll see that there is another tier coming. I kind of group them into two, some other potential hyperscale platforms. Some of these logos here are consuming hyperscale data center co-location in Southeast Asia, in Jakarta, Indonesia. But what is really interesting is that there's another tier, what we used to call the subscale tier, now we're calling the web scale tier, that are consuming and getting up to kind of where hyperscale platforms were consuming 5 years ago. So you remember when getting a 1.2, 1.5 megawatt data hall, which still of course exists today, was kind of a starter point. These platforms are starting to get up to there. And many of these do come from the United States, but at the same time they are pretty aggressive, increasingly aggressive about expanding into the APAC region. Just point out a few for you that are definitely also active in the region, Southeast Asia as well as Jakarta. Cloudflare, Akamai, which acquired a cloud platform, DigitalOcean, OVH, all have significant presence across the region and are now starting to move from that top 4 tier into that the second tier APAC markets. So what we're seeing, we've talked a little generically about wholesale or hyperscale co-location. What we're starting to see, and I think what's again fascinating about this market, is you're seeing a separation in that hyperscale co-location profile. So what we're starting to do is we've thought in this sector about retail and wholesale co-location. What we're doing now is thinking of retail in 2 different categories, enterprise, enterprise plus, and then hyperscale in terms of core hyperscale and edge hyperscale. Now, how do you define edge hyperscale? There's kind of a quick rundown of what that looks like. But in this marketplace, we're seeing that starting to cluster around the center, and of course in the regions to the east. And of course, some of the builds that we've seen this week are very representative of that. So if you take a further look at our research, we have kind of a full breakdown. Happy to follow up and explain more on how we're kind of re-taxonomizing or building a new taxonomy for this sector as it continues to change and evolve. So I promised a quick update on the Jakarta market. We've been following this market since about 2018-19 very closely. I don't live here, but we travel here many times a year. And so we've got a picture of the market that we feel very confident of, that we've been through 3 iterations. And I'm going to give you kind of a quick summary of those findings. So we've got the market valued at about 400 million, that's US dollars, growing 5-year CAGR about 22%. We've seen, and I think the key number here, of course, are the megawatt numbers to the top right, in terms of where the supply currently live and operating is. Critical megawatts, IT load, defined in critical megawatts and IT load, and then of course how much is contracted that averages out to 76%. We've seen the densities, of course, climb. In our first iteration, that was about 3.8, then 4.2. Now we have it about 4.5 kW per rack. So what we do a lot is not just analyze the underlying foundation of supply, but take a current picture of the demand profile, and then, of course, how that consumption plays out over time, which is, involves a bit of projection and, of course, an understanding of the marketplace. This is kind of the end result of that process. You'll see the 2 different colors, the dark blue hyperscale, and then the lighter blue retail or enterprise. Both are growing healthily, average out, as I mentioned, to that 22.3%, but you'll see the differences, of course, hyperscale co-location growing at a much faster 5-year CAGR of 28. But enterprise, not to say that that's not healthy and growing, we have about 14-15% growth. And you'll see on the bottom with the pie charts, with the dark blue becoming more than 50%. So it is a hyperscale, majority hyperscale co-location market. This is just another picture on how we're seeing that growth develop, the rates of growth over time. Obviously, as the law of large numbers starts to kick in, so you'll see those growth numbers moderate, but you're still seeing, even in 2028, we have well into still teens and double-digit growth. So back to this is kind of how we take a look at, try to create a snapshot of the supply situation in the marketplace. So we have 4 tiers. We're looking to build that into 6, but we'll first, so along the bottom you'll see how much is contracted how much is currently built out, the max built out, so everything that's operating, and if we maxed out that situation, of course, total. So total's the interesting one, if I'll maybe just touch a little on that. It's basically encompasses land and power banks, so what can be reasonably estimated to be in the pipeline or available for development. It's a bit of a judgment call in a reasonable time frame. What we plan to do is take that total capacity and start to delineate or divide into what is land banking and what is power banking. Look forward to doing that in the next iteration. We'll leave that headache for later. So I'm going to show you some maps in terms of where we're seeing kind of the activity cluster, just if you're not as spending much time or not as familiar with the Jakarta market. This is kind of where we've seen the activity cluster, roughly about 3 or 4 regions, and now we're starting to see the East region become so busy that we're basically seeing 2 regions, and that is where typically the hyperscale activity has happened. So typically in markets, we find that, of course, 3 availability zone architecture, and obviously there needs to be distance and there are various requirements around that. Where is that clustering in the Jakarta market? I think there was even not that long ago some debate as to how that would play out. I think it's starting to firm up quite clearly, and so the 3 availability zone cluster seems to be going central and around what I could say East 1 and East 2. So East or further east, Bekasi generally, and then Karawang. So the distances, hyperscalers all seem to be comfortable enough that they can build 2 availability zones in relatively the same region, rather than, there is a bit of activity towards the south, but right now, this is where the bulk of the activity is. In terms, if you drill into the report, you'll see that the number of data centers, but more importantly, the megawatts and the capacity being built out. So East 1, East 2. And and that's, we're going to talk a bit about the self-build environment, but this is kind of where we're seeing the hyperscale platforms cluster. If you came in late, if you're taking a picture, I mentioned that I'll trade you all the slides for a business card after, so we'll do a quick barter so that you can not have to do it. So talking about self-build, I think that's one of the biggest issues in this market. I think the self-build, and of course how that relates to the discussion around is this market, the balance between supply and demand, starting to kind of get a little out of line. We have a panel afterwards that we'll definitely delve into that topic here from the operating perspective. From the research side, we went and did in 2022 a pretty exhaustive kind of survey of self-builds around the world. These are the companies that were involved in that. I think you can see quite clearly clouds to the left, Western clouds to the left, Eastern clouds to the right, and then of course some of the kind of social media tech platforms that are that behave quite similarly in terms of infrastructure consumption down the middle. And that's also a report that you can access from us if you're a subscriber, but this is kind of the end result of that. We found quite interesting that in terms of what is operational from a self-build perspective, this is globally, not just Asia, was quite similar to the pipeline, and then that, obviously, some simple math to get to there in terms of total critical IT, either live or under development from those companies I just showed you. So that was 2022, and this is we're not finished the 2023 refresh, unfortunately, but Jabez, who many of you know, was good enough to kind of get in there and update roughly about halfway or into the third quarter of this year. And so he's seen a little bit of change, and that's kind of how it's been playing out. So, but in terms, this is our matrix. We do this for just kind of general build or lease. And then this is, of course, the hyperscale build or lease matrix. So in terms of the likelihood or tendency to self-build versus lease, is mapped out here. And so, of course, Amazon, an increasingly aggressive self-builder, Meta traditionally quite a self-builder, and of course larger data centers on the y-axis. And then I think what's interesting for the Chinese hyperscalers is that they tend to do self-building as well, but that's generally almost exclusively confined to mainland China. everything they do outside of China, whether that's in any region in the world, Europe, South America, and in particular Asia, they tend to consume co-location with data center providers, independent data center providers. So I think we'll talk about this in the next session, but I think the key around self-build is that it is a simple question. Do I use co-location? Do I self-build? And it's kind of a simple, simple kind of straightforward impact on how that affects the sector's demand profile. But in many markets around the world, you'll see that the conditions around self-building can oscillate, they can have phases, they can change, they can move forward and backward. And so it is a very fluid kind of dynamic, and what we're seeing it start to play out here as well, where the self-build strategy, say, one of the large hyperscalers are self-building. That is not to say that they will use that strategy indefinitely, where they will use that strategy in every country. So each market is different. Each platform is different, as well as the fact each cluster within a market, they may use a different strategy. Some hyperscalers build 3 availability zones, some build 2 and lease 1, or 1, and of course some lease 3 and don't self-build. So, yeah, and this is just another thing that we're starting to work on. I think it's a very kind of analyst-like, black and white, simple and straightforward, but the reality is there is this middle ground, and we're starting to see that develop here in Jakarta as well, where self-built lease, and then starting to see kind of that middle ground and build-to-suit scenarios for real estate entities working directly with hyperscale platforms, and sometimes involving an operating company. So there's definitely this gray area. We often get asked, so where do you put that in the self-build or co-location? And often the answer is it depends. So yeah, one of the big questions in this market over the last couple of years, I think I've talked to many of you here about that. Are we in an oversupply situation, or are we moving into an oversupply situation? The appetite and the interest in this market has been solid for quite some time. I would say, so I'll give you, our kind of take on it, at least at this point in the sector's development, is that it's kind of too soon to make that call. It may well go in that direction in the next little while. But I think in our history in tracking, especially young emerging hyperscale markets, which I think Jakarta is definitely representative of that, go through phases and cycles or waves, if you will. I would argue Jakarta is still in that first wave, and often in the second wave conditions and things start to change. So I would say that self-builds are going to be a part of this market. They will continue that way, but it's not definite how that's going to play out. So that's what's going to make this next several years very interesting. I hope I'm doing okay on time. Let me know if I'm not. But I just want to just go over just give you a sense of how the market is growing on a global basis. This is our total outsourced infrastructure. So everything that's run by third parties. So that's inclusive of co-location, as well as hyperscale cloud and managed infrastructure, private clouds as well. And within that number, I should have said, so we have that market tracking to about $350 billion this year at the end of 2023. Just so you know, again, those are US dollars, those are global numbers. And that's, the 5-year CAGR of the entire internet infrastructure industry is growing at about 18-19%, which is come down from our projections in the last several years. In the last few years, given what's happening in the marketplace. Drilling into that 350 billion, this is co-location. So let's start at 2023, 76 billion out of that 350 is co-location. And within co-location, as you see represented by the numbers, the different categories of co-location, which typically have been thought of as retail wholesale, but now I think increasingly makes sense to look at it in this way, in terms of tiers. So interconnection, which is another important service offered by co-location providers. And then as I mentioned earlier, in the hyperscale, enterprise, hyperscale splitting into core hyperscale on the edge, and then retail or enterprise into standard, let's call it, and retail plus. And so I will point out that hyperscale, you'll see there on a global basis growing at a 5-year CAGR of 23.3%, and that the 35.2%, hopefully you can see, but the sliver in the middle of those charts is very small. That's this emerging edge hyperscale or smaller hyperscale, if you will. component, and it's a pretty small market, but it's starting to grow, and I think is driving a lot of the maintaining data center co-location operator revenue and growth. So I guess I can't get through this without talking a bit about AI. It's something that has already been discussed in many sessions. I will focus in on just kind of share some tidbits of what we're seeing. I would say that right now, I think the state of the market is that we're starting to see in some US markets, Jonathan, we've talked about this, we've seen some leasing, so that things have materialized. I would say we have not quite seen it so much in other parts of the world, starting to see some in Europe from our analyst team there. Here, I would say we're probably more in the discussion, projection, planning phase. But just to share some of the things we've seen, I think I don't want to rehash with some of the great thoughts earlier around kind of latency and location. We'll maybe just talk a bit about what we've seen in some of the deals. We've seen some slightly underutilized assets that have runway, less tenancy, and the flexibility to retrograde enough to retrofit quickly to accommodate kind of the new workloads and the designs that need to accommodate that. Obviously, the higher densities as well, and we're seeing. Not necessarily, I would say there's been some talk about, okay, will AI data centers be a separate class, a separate category? I think that's a perfectly reasonable argument, but for the next, say, 5 to 10 years. For right now, what we have seen is data centers trying to accommodate AI workloads to the extent they can without having to upgrade their cooling and power infrastructure. Literally, we've seen taped off sections. Make it work for now, and then kind of look and plan towards being able to accommodate increasingly higher densities. And so it's been a little good timing for some of the co-location providers that have been able to win some of these deals, given they have the assets that kind of just fit where the market currently is, and everybody else, of course, is planning for what's coming next. So a lot of runway. So this is just kind of a summary. We often get answered, okay, where is this going in terms of the densities? Because you as operating companies know how to deal with this. So try to kind of just contrast. I think hyperscale, you can think about it as hyperscale 1.0 and hyperscale 2.0. Wasn't that long ago, it was about 4 to 5 kW rack for hyperscale deployment. It's now pushing 8 to 10, might even be a little conservative, starting to push a little higher than that. And so this is just a rough projection, AI 1.0 and 2.0, what that might look like. I think a lot of the talk around plus 15, 20 is very, very niche, very, very isolated. We don't see a lot of that. Do we, Jonathan? Not really. Yeah. What you are the guy who sees the most data centers ever without being an operator. But yeah, some of the feedback that we've been getting is that the reality on the ground is somewhere between 12 and 20, and everything else is a little higher. Oh. Yeah, okay, correct, okay. 12 to 20, and really anything above that almost considered just rare or exotic. But are we trending in that direction? That's probably where we're headed. I would suggest as a bit of an analyst's guess that this 1.0 to 2.0 with hyperscale took about, let's say, 10 years, give or take. In this part of the world, much faster. But as a general kind of industry-wide comment, about a decade or so, I would say that's going to be roughly half the time. So we probably, want to think in terms of an accelerated timeline. So maybe, a faster acceleration as well. Sorry, a faster increase in the density, of course, over a shorter time frame. So, yeah, and that, this is, I think, most of us can agree is going to change the way operators think about designing and building and operating data centers, how they procure the land, how they get the power to support that. They were building, we started to build big, and then with kind of edge, we started to build big. We started to build smaller, and now we're trying to build big and fast. But I think we will come back to small when it comes to the point where AI workloads start to separate between between language learning models and the inferencing. I would say we're not quite there yet. A lot of this is mostly happening in the same data center on the same campus. So yeah, I think Meta, what they did was really interesting if you haven't followed it. I think it speaks to what is happening in the marketplace. They last year basically paused all their data center builds in order to to rethink, redesign, and then rebuild for the AI workloads that are coming. And of course, they have some AI products and services that they're developing. Talked to an engineer that I trust, and he says it's a substantial, a very substantial redesign. And now they have increased their CapEx projection moving into 2024, and you should see more. So they will start to kind of unleash, get out of that pause and start to accelerate their builds again. So yeah. So in this transition is CPU to GPUs, and so I think it's we talk about where the demand is going to come from. I think it's not just the hyperscale community, the hyperscale platforms, which are obviously consuming a lot of this. I think another thing to look for is that next tier, and Cloudflare is actually one that is building very quickly. I believe they're here. These are the cities that already have GPUs. They're trying to get to covering the map by the end of 24. They are ahead of schedule as of their third quarter earnings call. So, but literally just kind of that scenario where they don't need to redesign data centers. They're at that point where they're just taking existing nodes and leaving certain cabinets or even just rows or slots and then just putting in the GPUs. They actually said they have guys flying around airplanes with suitcases of GPUs and going to markets around the world. So it's an interesting time. So I showed you this slide with colocation, but the question we get, and this is where I'll close. I know I'm coming up to time. What is the AI impact on the data center sector in terms of its value or its growth rate? This is our estimate. So you'll see our colocation numbers in gray, and then the blue is our estimate of where the impact, how that is going to play out. So we would argue relatively conservative. Free to hear your feedback, of course. But we've got that projecting at a 5-year CAGR of 86%. I'd say in about 3 months, we're going to have this refined, so we'll have a bit more detail. This is just the same numbers, but flipped over, so they can see what portion of the market, if our projection is relatively accurate, this is where we'll go from a very small part of the market in 2023, as you can see, about 4%, all the way up to over a third by 2028. So if it does happen, it will happen quite fast, and there is precedent. If you think about what's happened with hyperscale, how fast that's developed, this is, I would argue, an extension of that. So, in the interest of time, we'll just quickly skip over, I think, these topics around, what we're seeing around the scarcity of resources. The comment was made earlier around how Indonesia has why this opportunity is being pursued by many, because some of these issues that this market has not come up against, so I don't rehash those. But I'll just leave you with a kind of where we are with Jakarta. We kind of analyzed the market outside, just thinking about where the markets are. That first tier, so Europe, they have the flat markets. We have the JASH markets, Japan, Australia, Singapore, Hong Kong. But in that next tier, Jakarta is right up there, you see, with Seoul, Mumbai. These are kind of our projection of where the inventory of the supply in that market is trending. So you see in the current, in 2023, and then of course in 2028. And this kind of summarizes that. Where do we see maturity along the x-axis, growth and the upside in the market on the y-axis. And those 3 markets I just mentioned, Seoul, Mumbai, Jakarta, of course, moving towards that blue section where the top tier markets are. This analysis for APAC does include China and India. Some of our researchers excluded that. So with that, that's my contact information. As I mentioned, I'll trade you the slides for your business card. We want to try to keep this going on schedule. So I'm going to host the next panel. So I invite the panelists. I see 3 of you, or 4 of you. Just come on up here. The microphones are here, and we'll talk a bit about, this next session will focus in on the Jakarta market. So.